Hi, this is Joe Rabil with Rabil Stock Research. So we're going to take a hard look at the sectors today. We'll go through those sectors charts with the relative strength. It's important to recognize which sectors are moving, and right now there's a clear winner out there. And when you look at the individual stocks, as I do, I go through each one of the individual stocks in every one of the sectors. There's a lot of individual patterns setting up in this specific sector. So I want to talk about that a little bit, but want to start out with a lesson on using two time frames together. Very simple approach once you understand the concepts, and it can be used in any two time frames that you want. We are going to look at a number of examples in different time frames just to show you how it can be used, but it can give you a pretty big edge related to timing and also reducing your risk. All right, let's go ahead and get going. I'm going to start out with the CME group. CME is the symbol, and I've got a monthly chart in the bottom left, a weekly in the bottom right, daily in the upper right, and an hourly in the upper left. Now this is going to change. I'm going to switch over to longer time frames, but I want to start out with this because this is more of like the classic of what I have been showing in a lot of the lessons and stuff like that. So we get a move to the upside here, and I've boxed it out. So this is the higher time frame weekly chart, all right, and this would be the lower time frame daily. So on the upper time frame, we're looking for strength to the upside, confirmed by MACD hitting a higher high, and ADX showing sign of strength. Now sometimes it's just green DI poking up and hitting a new high, and other times when we have a trend in place, you'll have both the ADX also crossing above 25 and making a peak above 25. The other thing we're looking for that's very important is we want to see when the moving average, the 18 MA simple moving average, is rising above its 40, which is also rising. All right, if we have that, then we have a trend on this time frame. Now, I like to confirm that with what's taking place in the ADX and the MACD, but in reality, if you can find stocks that have an 18 above the 40 and both lines rising, in that time frame, the trend is positive. All right. Now, the closer they are to parallel, the stronger that trend is. So if this is a really strong trend, these lines will almost be parallel. And what you can do is you can basically draw a line over them and see how close they are to parallel. I mean, that was not bad. It was early in the trend, so it didn't necessarily show up as parallel. You can see here and here, it's pretty close. All right. Now, what I want to show is when this is taking place and we have rising moving averages on this time with confirming momentum, on this time frame, we're actually looking for the opposite. I call an opposing trend, where we make basically an ABC correction, and that causes the 18 to come down to the 40, and in some cases cross down below the 40. Once we have that, now we have this opposing trend. In other words, the 18 is below the 40 on this time frame, and it's above the 40 on this time frame. All right, now the 40 doesn't have to be declining. In fact, we like it to continue to be rising on this time frame. But one thing that's absolutely key to this is that we want to have low ADX. So we've shown strong ADX on the higher time frame on the way up, and then on the way down during the decline, we kind of want to see not a lot of strength. All right. So if we have that combination where we make an ABC to the downside and the ADX can't even get above 25, then it's basically game on, and we can look for an entry, in this case pulling back to the 18 as it's turning up, forming a pinch on this time frame with the MACD. All right, so we've got that. Now, I've talked about this in the past, but let's just start looking at this, and I want to show you a number of examples that have shown up recently. Now, what we've got is a yearly chart in the bottom left. All right, in the bottom right, we've got a quarterly, and then we've got a monthly in the upper right and a weekly in the upper left. Now, I've boxed this out. The upper time frame here would be the monthly, and you can see on Service Now, we made this strong move and pulled back and formed a pinch with strong ADX. So this is the higher time frame. We want strong ADX, and we get a pullback close to the 18. Now, if you notice what took place on the weekly chart, the MACD, which was really overbought when this was peaking over here, it actually pulled back as this corrected down. It pulled back to the zero line, and we had low ADX again. You see how the ADX dropped down below 25 and got low as this approached the zero line. All right, now the simple way to describe this as an entry pattern would be we'd be looking for a trend line break. There are 3 or 4 different entry patterns that we can use, trigger setups that we can use. In this case, it would be more aggressive because the MACD held right at the 0 line. But that's another example. So let's look at something like Lilly. Again, on the monthly, look at this strong trend. Look at the power of the ADX. And then we get a little reverse divergence. I'll just show you this. We make a higher low in price and a little mini lower low in MACD right at the 18. And then on this time frame, look at how the 2 moving averages come together. MACD comes down to the 0 line. And we have basically a low ADX pattern. And not real low, but the overall pattern of strength of this trend is so strong as this is turning back up and we're getting a crossover to the upside. It basically kicks you into the next trend. Now, and here's an example of a quarterly. So this is boxed out, the quarterly on the higher time frame and then a monthly on the lower time frame. All right, so we get this strong move and then we consolidate for several quarters, maybe 5 or 6 quarters, form a pinch, strong ADX condition. You see the 18 and the 40. You see how they're all similar? You see on Lilly, you see how the 18 and the 40, they're rising at about the same rate. You see NOW, you see how BET's rising above the 40. They're all rising and we're moving up. So on Costco, we get this move up, we pinch, we show strength. We've got basically parallel lines. And then we go through this consolidation where the MACD comes down, but notice how the ADX gets low again. All right, so it's kind of like game on and starts another move to the upside. Look at Goldman Sachs, another quarterly and monthly. All right, the quarterly, look at what's taken place. You see how the 18 and the 40 are moving up at about the same rate? We get a pinch on the MACD. We have a low ADX condition after a pop in green DI. And so we pull back here and then look at what MACD does. MACD comes down to the 0 line and basically kisses the 0 line right before it turns. And we have a low ADX on the lower time frame. That's what we want. We want strength to the upside. And then during the correction, we want low ADX. So we get that. So you could draw your trend line in and be in on that as this is turning to the upside. And then finally, look at this example of gold. Now this is the yearly, all right? Look at this yearly breakout. It peaked in 2011 and then corrected for 4 or 5 years and then turned back. And look at the way this played out. The MACD came down and made a little double bottom at the 0 line. And look at how the ADX finally got low. And then we started this march that we've been seeing now that has been moved up. And it had even a few years ago in sideways. But this is all a part of a major move starting on the yearly chart. It's really good to see this in multiple time frames. I was going to use a 5-minute and a 1-minute example, but the reality is I think seeing these big trends, these can be the quarterly and the monthly and the yearly and the quarterly combos can be really helpful, especially if you're doing stuff for your long-term investments like your IRAs or 401ks. So I thought these would be good examples to have, and make sure you're looking at these longer-term time frames for some of these patterns. If you're enjoying the content, hit that like button and also subscribe. So I'm on my services page at rabilstockresearch.com. If you click on that, you will see that at the top is the advanced trend and momentum courses. I am offering a bundle there where you get a little bit of a discount if you buy all 3 courses together. They are all now lifetime access. Go ahead and take a look at that. Also, the individual package is right below that. I offer 2 to 3 reports each week, plus a special video for that package each week. And also once a month, we do a live webinar. So if you have an interest, you can take a hard look. Also, if you just want to get started learning more about my approach, I would suggest starting with the book. There's a book tab on the website. You can take a look and get more information. My comments are for educational purposes only. Please do your own research before making any investments. All right, I wanted to start out with this look I have on Stockcharts where we can pull up 11 different charts at the same time. I've got all the sectors up at once. All right, now what's interesting about this is that I've the scale below the price. So I've got the weekly chart going back about a year with the 18 and the 40 simple moving averages on. Just get a feel for what's going on with the base of the trend, right? But then I've also got a 30 period moving average of the relative strength along with the relative strength line. All right. Now, Obviously, when this line is declining, it means that this sector is underperforming the S&P. When it's rising, it means that it's outperforming the S&P. So if we look at what's taken place, just as an example, we'll look at the basic materials. It's been downtrending, and we could go back quite some time. You see how long? This has been almost 2 years. Actually, it's been 2 years where it's been underperforming the S&P, this specific sector. Now, inside of this one sector, there's an industry group called gold that has been the strongest group over the course of the last 6 to 9 months. So you need to look at the industry groups, but for our purposes, we like to start with the sector, a little bit broader list, and get a feel for what's taking place in these sector moves. All right, now I'm going to basically give a gold, silver, and bronze out to the 3 sectors that I think have showing the best strength. By far this year, we've got XLK, I think, just really kicking into gear since late March. It bottomed, and on a relative basis, this is just from this bottom right here, it has just absolutely kicked in on a relative basis. So the move is not just based on the market going up. This is a leadership group here. Now, as I mentioned in the opening, I actually go through every single stock. So this week I went through every single technology stock with a market cap greater than 300 million. All right. So we're talking about anything above micro cap. I'm looking at them all. Now I do use a volume filter as well, so they have to trade a little bit as well, but I'm basically looking at anything that moves and anything that's got a decent amount of size in technology, and I do that for each one of the sectors. And the reason is that I think this bottom-up approach can give you a really good feel for whether this move is just based on, the top big names, the Mag 7 named, where we get, 20, 30 stocks out of the biggest cap stocks, and they're causing this to take place. Now, that has helped somewhat, but there are a decent amount of that second tier group that aren't necessarily in the biggest names, but there are a lot that have made very, very strong moves, and they are set up on an orderly pause or a pullback. They're going to look really attractive. So I like to look for that. Now, I would put this in first place right now. I would say the industrial sector is in second place. There are a number of stocks that have made strong moves like this and need a little orderly pause or pullback to set themselves up as entry setups, right? It doesn't mean that they're not, like if you're in them, you would stick with them. But if you're looking to buy, I would prefer to see some type of little pause or pullback. It doesn't have to be a deep pullback, but some type of a way to kind of work off the overbought condition. And I think also an area that I would be watching. And then the third place right now would be in the financials. Another attractive. Now I'm giving it third because it's kind of dropped off on a relative basis to the S&P, but I personally think it's sort of setting itself up for another move. There are a lot of strong stocks inside this sector, a good place to go looking for ideas in all different types of time frames. The strength off the low was good, and I think a lot of them gotten a little overbought in the short term. They need to pull back a little bit. So those are the 3 areas. If you go through and look at the rest, we're starting to see a little bit of life in the XLB. But we're pretty much struggling. I mean, I'm not saying I dislike the communication services. I know this has been a strong area, but not quite as, I wouldn't put it in the category of these 3. It would probably be 4th place. The rest of these, you can see utilities has dropped down. The pattern still looks fine, right? And the same thing with the real estate. The pattern looks fine, but we're going to need to see some improvement on a relative basis. And actually, the same thing holds true for consumer staples. So these 3 would be more defensive oriented, and they're just not showing the relative performance we want to see. Really don't like the action in XLV. While there are a few symbols inside there that look good, I think you got to be careful in this sector. This is probably the weakest of all 11. Okay, let's take a hard look at the QQQ, again pushing higher. Now, The way I look at this is that we have this backdrop that is offering a pretty nice wind at our back, right? Because we've got this rising 18-month, which is above a rising 40-month. And we can see in times past when that's been the case, it acts as a really good bias. So I view this as a bullish bias is what we've got. All right, now that doesn't mean it's necessarily a timing tool. I don't use the monthly as a timing tool necessarily. Like it's very rarely a trigger unless I'm doing something longer term, like I talked about in the opening with the quarterly and then the monthly as the trigger. But for the most part, I'm looking at the monthly as giving me an idea of what the bias is. The bias is up here, all right? Now, when we look at the weekly, it's a little overbought. It could use a pause or pullback. Now, when I say a pause or pullback, the way it could play out is we could follow through a little bit more. We could form some type of little consolidation pattern. It doesn't necessarily even re-enter the breakout, but it causes this to work off this little bit of an overbought condition that it has in the short term. If we go back and look at 2020, we did something similar to that after we broke out. We got this little zigzag pattern, right? Now the S&P pattern had happened right above the breakout, all right? But in this case, it's just something we want to be on the lookout for, is maybe something along those lines as being, seems like it would make sense. The 18 week is way down here under 500. It just seems like that would be helpful to be on the lookout for that. Now, the way I'm looking at it right now is that this 18 on the daily chart is kind of in charge right now. We didn't really test it here. It didn't really make it all the way to here, but we tested it here, tested it again, kind of tested it here, tested it again. So until we break the 18-day, right, I think you have to have a bullish bias, number one. And number two, I think you need to be prepared for prices to continue to kind of climb higher. Now, what I would say is that if we can get a break of the 18-day, then I think we'll finally come down and consolidate back towards the 18-month and the 18-week. And that probably represents a pretty good buying opportunity if it plays out that way. We still have a little bit too much bullishness, more bulls and less bears again this week. It's pushing up into an area that I would consider to be a little bit more high risk, which means we got to be a little bit more selective about our entries. But it doesn't mean we don't trade. It just means you got to be a little bit more selective, maybe play with a little bit lighter size. Let's take another look at the IWM. It is showing signs of improvement, but not enough to truly shift things around. One of the things I would suggest here is that we have made it back above. So this is the 18-month line. We have gotten back above the 18-month, but what I want to see is improvement in the price structure. I think we're going to need to see an orderly pullback of some kind and then a turn back to the upside. And I think this whole structure will start to look a lot more attractive. The other thing that needs to take place while that's developing is improvement on a relative basis. We still don't have a rising moving average on the relative strength. This is going on 2 years now where we haven't seen the type of improvement on a relative basis that could kick things into gear, and we could start to see a pretty big broadening effect. All right, let's go through some symbol requests. BRKB is, I don't like the way this played out at the peak, right? So at the peak, I was basically giving warning signals to my clients because the ADX did not confirm at this high. And what that means to me is that there's a high probability on this time frame that the 18 is going to come down to the 40 and potentially crisscross or whatever. We go through a reversal on that time frame. I do think there's pretty good support underneath, so I'm not really expecting a big decline. But what it does tell me, it's just not timely right now. I think it needs more time. We're going to need some strength on the daily chart before this is going to be ready. Okay, look at DAVE. Strong move here, but very overbought right now. We're going to need a pullback. I'd like to see this pullback a little closer to 200 and form an opposing trend pattern on this time frame. What that means is that we're going to need kind of like an ABC correction, and that's going to cause the 18 to come down below the 40, and then we could be in a position to maybe have a setup that we could get interested in on this time frame. EVLV is another really attractive. This is one I highlighted for my subscribers on this pullback to 5. And I think this is still in a pretty good position. It needs a little bit of a pause here or consolidation to set up again. but definitely a stock I would be watching at this point. NN, really nice little consolidation pattern starting to emerge after, look at this zero line reversal with low ADX. So we're going to look for a pullback on the weekly chart and look for the setup to take place. Monthly is in a really good position. This is a great stock to keep on your watch list and watch for an entry for sure. STKS showing some signs of life, getting above the 18-month line, but not quite there yet when we look at it from a weekly standpoint. It's made this move. The ADX I'd like to see, climb a little bit more before the pullback. We might need to get above 5 before this is really ready. Now, you could watch this for a pullback to the 18-week, but I think it's a little premature still. We don't have anything convincing yet on any of these time frames, so I think I'd watch for a little bit more of that. PSIX, again, really strong move, but we're very overbought. Now, I don't typically want to play a pullback on this time frame if I'm this stretched on the weekly chart. I feel like I'm chasing a little bit. If I'm going to do this, I've got to go down to the hourly chart and play this really tight, and it's you got to be pretty nimble to play that type of a pattern. The other thing I don't like is that we've gotten 3 distribution days in the last couple weeks. I don't like to see that after a big move. Give this a little time. I think it needs a little bit of time. This stock, so we're looking at this as a potential trade, off the weekly. I mean, it's just a really awkward pattern with the gap up and then the sharp move down. I'm not saying that it can't work. It's just really tough to play this. The chart is really kind of messed up. I think if I'm going to do it, I'm going to wait for this to form a little higher low. We have a serious amount of overrun on the daily chart. So look for this to push up a little bit more and then play the first higher low on the daily chart. You could go down to the hourly for your timing on that, but that's kind of how I would be on the lookout for that. And then STRL, strong move to the upside. Let's see if we can't get a little bit of a pullback here closer to 200. Again, it's going to form an ABC on the daily chart to give us the next entry pattern. I don't think I would be looking at this any other way. We want to get this a little closer to the 18-week. We want to get this to pull back. I mean, this is up several weeks in a row, so that's really what we're looking for our next entry. Thanks for joining me today. So if you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, I would go to my YouTube channel. Have a great week, and we'll see you next time.